Did you know that if you had invested just $1,000 in the S&P 500 30 years ago and reinvested the dividends, you'd have over $20,000 today? That's the power of investing. The best time to start was 20 years ago, but the next best time is today. So in this video, I'll show you exactly how to set up your first investment account in under 20 minutes, even if you've never bought a stock in your life. No complicated jargon, just some straightforward steps that anyone can follow. First, you need to pick a brokerage. This is the platform that you'll use to buy and sell your investments. Think of it like your gateway to the stock market. For beginners, I recommend using user-friendly platforms like Fidelity, Charles Schwab, or Vanguard. If you want something with a more modern, slick app interface, Robinhood is a really popular choice too. So what should you look for in a brokerage? Well, it'd be good to have no account minimums. You should be able to start trading with whatever you have. No trading fees. Most brokerages offer free stock trades now. Fractional shares so that you can buy parts of expensive stocks like Amazon or Tesla. And a user interface that you actually understand. Don't overthink that part. All major brokerages do essentially the same thing. They let you buy and sell investments. Just pick one and move on. Once you've chosen a brokerage, you'll need to download their app or visit their website to open an account. The sign-up process is usually pretty straightforward. You'll need a few things: your social security number, your bank account info, and some basic personal info. And they might ask you about your investment experience and your income. This isn't about you qualifying, everyone's qualified. It's about the brokerage understanding your situation. You'll also need to choose what type of account you're going to open. So for most beginners, a standard individual brokerage account is fine, but if you're investing for retirement, an IRA or a Roth might be better. We'll keep it simple for now. This whole setup process usually only takes about 10 to 15 minutes. After your account is approved, which might take a couple of business days, you'll need to transfer some money into it. Most brokerages let you link your bank account by providing your routing and account numbers, but some of them let you use services like Plaid, where you just log into your bank and it links them. These days it's pretty frictionless. For your first deposit, start with an amount that you're comfortable with. Don't feel like you need to dump your whole life savings in there. Even $100 or $500 is perfectly fine to start. Remember, the goal here is to start building the habit of investing, not to get rich overnight. So now, for the exciting part, actually buying something. When you first log in, you might be overwhelmed by all of the charts and numbers and options. Take a deep breath. You don't need to understand all of it right now. For beginners, I recommend starting with a broad market index ETF, like the SPY, the SPY, which is an S&P 500 ETF. Why? Well, it's because these give you broad diversification across hundreds or even thousands of companies in one purchase. You're not putting all your eggs in one basket. Here's how to make a purchase. Search for the ticker symbol, like SPY. It's usually 3 or 4 letters that represent that company's name. Click buy or trade. Enter how many shares you want or how much money you want to invest if your broker offers fractional shares. Then select market order. This just means that you'll buy at the current market price. Review and confirm your order. That's it. Congratulations, you're now an investor. But setting up the account and funding it, that's the easy part. Now that you're set up, let me save you thousands of dollars by telling you what not to do as a new investor. First, see that tab labeled options in your brokerage? Consider it off limits for now. Options trading is advanced, complex, and the fastest way to lose everything when you're first starting out. I've seen new investors blow up their entire accounts in days messing with options. Don't check your investments obsessively. This is the psychological killer for new investors. Checking your portfolio several times a day is like digging up a seed to see if it's growing yet. Just cut it out. Pick a schedule, maybe once a week or once a month, and stick to it. Don't over trade. Have a plan and stick to it. Apps like Robinhood have faced scrutiny and criticism because of how much they gamify investing. From confetti animations when you make a trade to notifications that nudge you during short-term price movements, here's what you need to understand. Apps like Robinhood don't charge you to trade. That's because they actually make money every time you trade. It's called payment for order flow, and without getting into the details, the short version is that these companies are incentivized to get you to trade as much as possible. That means when a stock runs up, they will nudge you, hoping that you'll chase it and buy. And when it drops, suddenly they will nudge you, tempting you to panic sell. Resist this urge. We humans have a bias towards action, but sometimes, oftentimes, the most profitable investors are the ones who do nothing. They just wait. patiently. The next newbie mistake is putting too much into one stock. Now, I know you might be convinced that Tesla or Apple is going to the moon next week, but resist the temptation to go all in on a stock, especially if it's one that you heard about as a hot tip. By the time you're hearing about a can't miss opportunity, it's probably too late. And chances are, if you buy a stock just because somebody told you to, you'll have no conviction in what you hold or why you hold it. And if the price dips, you're gonna panic and sell for a loss. The final step isn't really a step, it's ongoing. The most successful investors are the ones who build discipline and systems. The goal is sustainable habits, so set up automatic deposits so that you invest consistently, reinvest your dividends, increase your contributions whenever you get a raise, review your portfolio quarterly, not every day, and have a clear plan for what you're investing in. Remember, investing is a marathon, it's not a sprint. The goal is to build wealth over decades, not days. So there you have it, everything you need to start investing today. Pick a brokerage, set up an account, fund it, make your first purchase, and then, this is the hard part, be patient. The best investors aren't the ones with the highest IQs or the fanciest strategies. They're the ones who stick with it, stay disciplined, and let compound interest work its magic over time.